Grizzle one-on-one uranium. Let's go. So we're joined by Corey Diaz. He's the founder and CEO of Anfield Energy. Corey, welcome to the show.
Thanks very much. Great to be here.
So Corey, I want to start off with a big picture question. So what's the opportunity you see for U.S. uranium operators given the current geopolitical tensions and renewed investment in non-fossil fuel energy sources?
Well, I think it's important to note that the U.S. has the largest installed base of nuclear reactors in the world, and yet the supply of uranium, produced in the U.S. is essentially zero. And so the U.S. is dependent on foreign actors in order to get material flowing into the sector. So countries like Kazakhstan and Russia play a prominent part in material coming into the U.S. So there's significant geopolitical risk associated with those countries, especially given the war. Supply chains are broken down through COVID and the war in Ukraine. I think it's important to note that Kazakhstan, a lot of the material that comes through Kazakhstan to the U.S. would generally go through Russia for conversion and enrichment. And given the relationship between the West and Russia today, conversion and enrichment isn't something that's likely being used by utilities in the U.S. So, I think it's an interesting position to be in now as a U.S. producer or near producer, because U.S. utilities are going to be looking for other suppliers of material. And certainly we are in the position to replace some, not all of the material that would flow out of Kazakhstan, but certainly we are in a much better position than we've been in the past 3 to 5 years.
So Corey, I wanted to ask you if you had to handicap it, or do you think the industry is at all prepared if the West was to put sanctions on Russian uranium processing or anything like that? Is that basically off everyone's radar at this point?
I think it has to be. I think, one of the issues is that over the years, Russia has become, a dominant player in conversion and enrichment. And Kazakhstan obviously has been, one of the largest producers of uranium for some time. So we've got risk not only related to conversion and enrichment, but also production. We also have China stepping into the breach and starting to take supply from Kazakhstan, which means some of the material that would flow from Kazakhstan to the West is now flowing east. We also see Cameco supplying, China Nuclear with material. So we're seeing that China is, the dominant player when it comes to uranium demand. And so that means that the supply is shrinking to such a point that, there's a significant risk that you won't be able to secure significant long-term contracts.
So the West knows it's just not feasible at this point to really crack down on Russian supply and processing.
Absolutely. So in North America and the West, they're looking to restart, conversions such as ConverDyn starting up in 2023. You've got Urenco looking to increase its enrichment capacity, but it's going to take time. And certainly, it's going to take a few years in order to meet whatever capacity is going to be, turned down from Russia in order to kind of get things stable again.
Got it. So I want to move on to Anfield. Can you guys have a unique kind of hub and spoke model in simple language for people who may be new to the space? Could you explain that a little bit more?
Sure. So, essentially we have a hub, which is what we call the Shannon Mill, which is one of only 3 licensed, permitted, and constructed conventional uranium mills in the U.S. And the spokes are represented by our significant projects. So we've got the Velvetwood Mine in Utah. We've got the West Slope project in Colorado, and we recently acquired the Slick Rock project also in Colorado. And, in combination, that's roughly 30 million pounds of uranium and over 100 million pounds of vanadium.
So you have a unique business model where you do have vanadium assets as well as uranium. Could you help us understand, what does the future of Anfield look like? How much of your revenue would you ideally like to come from, uranium versus vanadium?
Well, I think it's important to note that, our Velvetwood project in Utah is a uranium mine with some vanadium in it. But when we look at West Slope and Slick Rock, those are actually vanadium mines with uranium in it, because the ratio is roughly 5 parts vanadium to 1 part uranium. And so going forward, our expectation is that uranium will be the dominant revenue source for us, because we'd expect to see uranium prices in the triple digits in the relative near term. And the way that vanadium is priced in the market, if you get above, call it $20 per pound, all of a sudden a whole bunch of new supply comes online, because there are giant mines that supply vanadium which aren't uranium related, and that will kind of put a cap on the price. And so if it's in that $10 to $15 band, then we can continue to produce uranium and vanadium and not affect the larger market when it comes to kind of companies that are looking to strengthen steel through the vanadium process. So our aim is to have a uranium dominant revenue driven business.
Yes, it sounds like as good stewards of capital, you wait for a price response on either of those to make investment decisions, to decide what that split would look like.
Yeah, well, I think either way, at this point, it's not really relevant in terms of what the split will be. What's more important to us now is the general macro environment and the trend of the uranium price. So we are, in a production go forward position at this point in time. So we're moving straight, full steam ahead to get the mill up and running in order to start producing.
Gotcha. All right, I have a slide I want to throw up that just has some of your assets so people can understand where you're located. Could you tell us how you decided on these particular properties when you were putting them together? Kind of let us get in your head a little bit.
Sure. So look, we've been involved in uranium, since 2013. And, our idea was that, it's an unloved sector, an unloved commodity, and it's a great time to start acquiring assets in a low price environment. So our first transaction was with Uranium One, which is owned by Rosatom, which is a Russian state-owned entity. And at that time, we acquired the Shooting Canyon Mill along with the Frank M mine, the Finley Tank mine, and the Velvet Wood mine. And then in 2016, we did a second transaction with Uranium One, whereby we acquired assets in Wyoming, which are ISR or in situ recovery assets. And alongside that acquisition, we actually signed a resin capture and processing agreement with Uranium One to use its existing processing facility in Wyoming. And then in 2018, we acquired the Westlow property and an asset called the Charlie ISR property in Wyoming from Cotter Corporation. And then in 2022, we actually swapped all of our Wyoming ISR properties for the Slick Rock property. We did a transaction with UEC. And so ultimately what our aim was to get conventional assets which could flow through our mill. And so as we acquired assets along the way, we always had the optionality embedded to say whether or not we're going to move forward with processing, using ISR through a third party, or ultimately focusing on our own hard rock opportunity. And so when we did the last swap, we actually acquired an additional 70 million pounds of vanadium. So it actually helped us accelerate the opportunity on the vanadium side of the business too.
Now, this mill sounds important. Just so I don't butcher the name, can you tell me how to pronounce the name of the mill?
Sure. It's Shooting.
Shooting.
Yes.
All right, good. I'm happy I checked. So as we're talking about this Shooting mill, what are the remaining steps, whether it's regulatory or operational, and your expected timeline for when you'd like to have that start operation?
Well, like our hope for the mill is that we're up and running by 2024. And so we recently signed an agreement or engaged Precision Systems Engineering to put together a reactivation plan for the mill. And so part of that reactivation plan for the mill included the identification of which parts of the mill itself, which parts of the equipment need to be replaced or refurbished. They're also designing a vanadium circuit for the mill. The mill doesn't have a vanadium circuit currently, but given the endowment that we have when it comes to vanadium, over 100 million pounds, it makes sense to have a processing circuit on the mill in order to capture that material. Thirdly, Precision Systems Engineering is very strong on procurement, so they'll help us with getting the equipment that's required to be replaced and identifying those parties who can refurbish the other parts that we don't need to replace. And then finally, it's critical to point out that this is the last engineering study required prior to us physically refurbishing the mill and preparing it for restart. So, once we've got the agreement and once we've got this report done, and that'll be by Q2 of 2023, we're in a position to move forward to refurbish the mill with the aim to start production in 2024.
Just for people who aren't really familiar with the whole process of getting a mill back up or, having a mine permitted, is it mainly is permitting the main hurdle that draws out timelines? It's not operational, building the thing or refurbishing it.
Yeah, it's regulatory. The sector is highly regulated, as I'm sure you can understand why. But certainly, from our perspective, we have a lot of the permits already in place. One of the things that we do as Anfield is we identify projects which are already advanced. We don't do greenfield projects. We're not an exploration company. We bought a mill which is already in existence and had previously run. We buy assets which have historic resource, current resource, or past production. So we don't have to go through the hurdles of trying to start from scratch and build our way up because we want to operate in the current uranium cycle. So we have a lot of the permits that are required already in place. The mill itself has a radioactive material license. It's on standby. We're just looking to move it from standby to operational. We've got permits in place for West Slope and for Velvet Wood. So those are ready to go. Will be ready to go by the time the mill is ready to start accepting material.
Great. So on that note, maybe could you help investors just walk us through what the upcoming catalysts are that they should look for over the next year or so?
Sure. So, one thing that we just mentioned is the fact that we have this reactivation plan coming down the pipe from Precision Systems Engineering. I think that's going to be a significant catalyst for the company. Really understand, kind of what the costs are and how we're going to get the material that's required for the mill to be put together and restarted. We're also putting out a preliminary economic assessment for Velvet Wood. We had one that was out in 2016, but it didn't capture any of the vanadium that's present at Velvet Wood. We know that there's vanadium there because past production showed 4 million pounds of uranium and 5 million pounds of vanadium. We're also looking at a PEA for the 4 projects on which we have a resource at West Slope. West Slope is comprised of 9 mines. We put out a resource related to 4 of those, and we're adding economics in early 2023. We may look to package both the West Slope mines with the Velvet Wood mine to create an even more global resource and economics. And so that'll be a significant catalyst in early 2023. And then later on in 2023, we'll look to put out economics and a resource related to slick rock. So we've got a lot of resource related and economics related need to be coming down the pipeline. And, just to show everybody that, there's significant value in the company, despite the fact that we're trading at a significant discount to our peers.
Now, as we just think about the uranium price that would be required to make all of this viable, what's kind of the range that you're looking for that would make it kind of a no-brainer to bring the mill on and any additional assets?
Well, we turn the mill on today if it were ready. I think the important thing too is that we've got, as I mentioned, vanadium mines with uranium in them. So the vanadium content in that mine adds significant value to the ore, especially when you're transporting, and certainly serves as the potential, an offset when it comes to expensing material. For example, if we're looking at rock, if we're looking at $50 uranium and $10 vanadium, that's essentially, $100 per pound, right? As opposed to just 50 with the uranium. So having that balance allows us to move forward on the mill much more quickly than waiting for a higher price environment.
Gotcha. Well, Corey, this has been a great conversation. I know there's a lot more to dig into on Anfield, but it definitely piqued our interest. So we'll be watching you guys closely. So thanks for being on Uranium One-on-One.
Well, thanks for your time. I appreciate it. Happy to come back.
Thanks a lot, Corey.